Chapter 2, The Accounting Equation and Double Entry Bookkeeping. Don't let the chapter heading scare you away. We're going to go slowly, and you can always contact me with any questions. The accounting equation is this: assets equals liabilities plus equity. Assets are what you own. Most of the time, assets are tangible, physical items like cash, cars, land, and equipment. Intangible assets can also exist, like a business's logo. Liabilities are what you owe other people, like a credit card, payroll taxes that haven't been paid yet, or a loan. Some of the time, you take out a liability in order to obtain an asset, like taking out a loan to buy a house. Equity is the value of the difference between your assets and your liabilities. For example, you want to purchase a house for $100,000. You make a down payment of $30,000 and get a loan for $70,000. Your asset is $100,000 equals your liabilities, which are $70,000, plus equity, which is $30,000. If you make a payment of $10,000 toward the capital of the loan, let's not consider interest right now, the equation would now look like this. The asset is still $100,000, but now it equals liabilities, which are $60,000, plus equity, which is $40,000. And that is double entry bookkeeping. Double entry means that if something affects one category, then another category is going to be affected as well. For example, if you gain an asset, then you're going to gain either a liability, equity, or both. If you make a sale in your business, money is going to go into your checking account, which is an asset, and you're going to have more equity in your business. If you purchase items to sell, money is going out of your checking account, which is an asset, and you're going to have less equity in your business. If you make a purchase with your credit card, which is a liability, you're going to have less equity in the business as well. There are millions of examples, but here are some key principles to keep in mind. Just because two categories are affected doesn't mean that they can't be on the same side of the equation. You can increase one asset while decreasing another. You can also increase a liability while decreasing equity. No matter what, two categories are always affected. Now, what are these categories I'm speaking of? They are called the chart of accounts. Go ahead and go to the next chapter and I'll explain these categories in a more practical way. Note: for more on double entry bookkeeping, you can see Chapter 10 where I dive into debits and credits. As a bookkeeper, you must understand debits and credits, which is how the bookkeeping software works. However, I managed to write this book without mentioning them, so it isn't crucial for the practical business owner to know. You can do your own bookkeeping without this knowledge. I simply wanted to make this information available to you if you find yourself asking why to anything that I'm doing in the following chapters. If you're not a numbers person and you're just trying to get by, ignore Chapter 10.